The announcement of BlackRock's Bitcoin spot ETF application and pending approval has done a lot to attribute to the price appreciation of Bitcoin, just because the size of the entity that BlackRock represents compared to the amount of Bitcoin in supply available for them to buy has attributed so much to the narrative of Bitcoin scarcity, and not just scarcity, let's be real, mathematically proven scarcity, absolute scarcity of Bitcoin, BlackRock's ETF approval, among the handful of other institutional investors that want to get their paws on real native Bitcoin, have done far more for that narrative than the Bitcoin halving event maybe ever will. But JP Morgan has their thoughts to share on this. And is BlackRock about to do the same thing for Ethereum? Will it do the same thing for Ethereum? And what the heck is going on with the SEC? That is what we'll be covering in today's video. But first, let's talk about JP Morgan. So oh man. JP Morgan does their best to suppress the price of Bitcoin because they obviously haven't bought as much as they would like to at this point. And now JP Morgan is coming out and their analysts are saying that, number one, they're skeptical that this hype for the anticipation of the ETF approval of BlackRock, among others, mind you, a spot Bitcoin ETF means that they have to buy real Bitcoin. It is not a futures contract. It has to be settled in real Bitcoin. That means they have to buy real Bitcoin, the kind of Bitcoin where only 21 million will ever exist, never mind the 3 to 4 million that have already been lost forever. And JP Morgan thinks that some reason this scarcity just doesn't exist. And they think that this hype of the ETF will fade away. In fact, they're saying it will be a buy the rumor, sell the news situation. JP Morgan's going to learn real quick what scarcity actually means for a free market that Bitcoin is. Furthermore, speaking of the halving event, JP Morgan thinks that it has already been priced in, even though it is several months away. And typically, that event is just the awareness of Bitcoin scarcity. If these ETFs haven't done it already, time and time again, as the halving events approach closer and closer to time to their actual occasion, they are not priced in. And so JP Morgan is trying their best again to say, you know, it's already here. This is as best as the Bitcoin price is ever going to get. And it's just going to flop from here on out. That's what JP Morgan wants you to believe. And the lesson in today's video, just to lay it out for you, will be, can you decipher what is actually happening, what the facts are of the Bitcoin supply, of the cryptocurrency market, and the actions of those who want to buy into this market versus what these entities would like you to believe? Because that discrepancy is the opportunity for those of us who know better and can capitalize on it and not fall for their shenanigans like they would love us to do. Speaking of BlackRock, much like how they did with the Bitcoin spot ETF, now they have registered for the iShares Ethereum Trust in Delaware. Now, the last time they did this was for the Bitcoin spot ETF, and that was 7 days before they had their application submitted to the SEC for approval. So, you know, what they've done with Bitcoin is Ethereum next. And can that even happen? Does Ethereum, this is a very legitimate question, does Ethereum have the same type of scarcity that Bitcoin has? And will a Ethereum spot ETF have the same effect on the price of Ethereum as it has for Bitcoin? Now, for those of you who have been following the EIP 1559, that was passed a few years ago, and how the burning of Ethereum transaction fees, even though, well, let's be honest here, Ethereum does not have a hard cap supply of the coins that can be created. And they have somewhat fixed that or amended that to appeal to this crowd that loves scarcity, where now they are actually burning more Ethereum than is being created. So actually, Technically, the rate of emission of Ethereum is less than Bitcoin, but this is not hard coded. And that is very important to understand for anyone who is investing in Ethereum. But this submission of the iShares Ethereum Trust in Delaware just rings true to all of the warnings or maybe heads up that Toby has tried to give you all in the months preceding this video, where he was saying, you know, Bitcoin was first and obviously Ethereum will be next. Well, this is ringing true and is proving a point here on out. And for those of you who are in our CT Club, if you haven't joined yet, I highly recommend you check out learningcrypto.com. You all would have seen that we have been more aggressively dollar cost averaging into Ethereum at the $1,600 range, and we are very happy to have done that. But let's see how this progresses with the Blackrock application, probably soon to be application for the SEC, and who will follow in Blackrock's footsteps. Now, speaking of FUD, going back to, JP Morgan and such, sometimes we have articles trying to inspire some FUD. And this one, again, is aimed at Ethereum, where there's this article here on Coin Edition saying whale deposits 25,700 Ethereum worth 49.52 million on Binance Exchange. In fact, the same whale has transferred a similar amount onto Binance back in November 3rd and 6th. Now, again, this is about $49.52 million worth of Ethereum. If you look at the trading volume of Ethereum, especially the past few days, it has ramped up considerably, where we're now seeing $36 billion worth of trading volume for Ethereum, where this is roughly 1% of all trading volume on Ethereum. And honestly, good on you. If this whale were to make these trades at these prices, they would see a reflection of $1.81 million in profit. So they're selling at a profit, and that's something that I hope everyone does. You don't sell at a loss. That is selling into emotion and a mistake that we all make at some point in time. But how can you hate on someone maybe preparing for the hype that is soon to come from the official announcement that BlackRock is applying for a spot Ethereum ETF? Not all whales are stupid, and I don't think this one is either. All right, now moving on to the SEC. What is happening between Congress and the SEC and their funding is really interesting. It is good news for those of you who are in the US and maybe you're trying to build a cryptocurrency business there, or you already have one and you're trying to maintain it in the United States. What is happening with Tom Emmer? It's official now, it is passed, where they will stop the funding for the SEC until Congress passes official legislation on how cryptocurrencies will be regulated. So effectively now they are putting a stop to the SEC regulating through enforcement without any official legislation in place. So at face value, this seems good. It's going to maybe put a hold on the SEC taking so many cryptocurrency projects to court without any backing directly from Congress. But it's not completely good news, because we don't know what that legislation will be. Maybe this legislation that will come out will actually back what the SEC has been doing so far. I'm just trying to give you guys a well-rounded perspective on what is happening in the development of cryptocurrency regulation in the United States. Of course, Europe and other countries around the world have become much more transparent on how they plan to regulate cryptocurrencies, and it's been reflected on how different projects are maybe emigrating from the United States and leaving to places where they will be served better, and a place where they know what to expect in terms of regulation. That'll wrap it up for today's episode. Thank you for watching. If you guys want to know how Toby and I are preparing for the incoming price fluctuations of Bitcoin, Ethereum, and the micro caps, you guys, if you think we're not in a bull run yet, you're obviously not in the CT Club. No offense. We're finding more than enough profits in the micro caps that Toby has been finding. And if you're in the CT Club, you already know. If you're curious, check out learningcrypto.com, and we'll see you there.